morning. You're watching Businessworld Live. I'm Danie Laurel. It's the start of a new trading day. Let's kick off with our banner story. The Bangko Sentral is keen on keeping an accommodative stance to support the country's recovery from the pandemic-induced downturn. Bangko Sentral officials also told Nomura Global Market Research that further monetary easing is still on the table given the surge in COVID-19 infections. The BSP said that once sustainable recovery becomes apparent, they will implement a gradual exit strategy that is neither too early nor too late. In a virtual economic briefing for Japanese investors, BSP Governor Ben Diokno said unwinding policy support prematurely will be costly. Meanwhile, economic managers booed Japanese investors during the briefing conducted by Sumitomo Mitsui Bank, touting the Philippines' solid foundation for recovery despite the spread of the Delta variant. Now, heads up, Metro Manila residents, we are still under MECQ and will likely remain so until September 15th. Malacanang deferred the easing of quarantine restrictions to GCQ and NCR, along with the planned pilot testing new alert level systems under the granular lockdown strategy. However, Palace spokesperson Harry Roque said the MECQ extension could still be cut short. That is, if the IATF approves the guidelines for the GCQ with alert level systems before September 15th. But for some infectious disease experts like Dr. Ronjin Solante, the extension of MECQ is a welcome break, especially for the already overwhelmed healthcare system in the metro. Well, that GCQ bubble burst pretty quick, and let's take a look at whether the index is feeling the pinch. You can see us opening down more than 17 points. It's down by 0.3% to 6895.33. And of course, you've got here the malls, the restaurants, certainly disappointed. We thought that we could already dine in, but that does not seem to be the case. Max is down by 0.7%, 0.8%. JFC as well, which had enjoyed quite a bump up just ahead of the GCQ announcement. That is actually up, rather. I must correct myself. Max is up by 0.8%. JFC up by 1%, but Shakey's down by 1.3%. Let's take a look at the malls and whether foot traffic that they were hoping for might be causing the pullback. You can see SM Prime down by 0.9%, together with Ayala Land, Vista Land, and Mega World all in the red this morning. However, we do have one sector which seems to be business as usual, regardless of QQQ status. Those are the telcos. You've got Dito Telecom in the green, up by 10 centavos. It's up by 1.14%. This as they've announced that they have passed the second technical audit. So what they are saying is that, in two phases here, the second part, they've already covered 52.75% of the population. That's versus their goals, which were 51.01% of the population. Meanwhile, you've also got them announcing their minimum average broadband speeds are 89.13 Mbps and 853.96 Mbps for all fourth generation and 5G sites. This is versus what they committed, which was 55 Mbps. Meanwhile, still on the telco space, you can take a look at PLDT, which is down by 13 pesos here. That's down by 0.9%. This as we are getting reports that they're said to mull a $500 million data center sale. They're said to be working with JP Morgan on that deal. They already have 10 globally certified data centers in the Philippines with a combined 72 megawatt capacity and over 9,000 racks. Now recall that separately, they've also weighed disposing of their towers. It's going to be an $800 million sale and a leaseback arrangement. That was according to Bloomberg News. They reported that in July, but deliberations still ongoing. PLDT may decide to keep the data centers, and so far they have not commented on this news. It's the first bank ever established in the Philippines and Southeast Asia, but on its 170th year in business, it is faced with unprecedented challenges. Here to tell us how they will stay in the game for at least another 170, we have with us Bank of the Philippine Islands' newly minted CEO TG Limcaoco. Good morning, sir. Welcome to the program.
Morning, Nanny. Morning. Glad to be here.
Sir,
Well,
you're inheriting a bank. Yeah, I just wanted to say that you're inheriting a bank with, of course, a strong balance sheet, quite a good reputation, longevity, resilience, but truly a challenging time. What are your key priorities?
Well, as you said, we celebrated our 170th anniversary last month, Danny, and we did it with the theme of what we call reinvention. But reinvention is just more than for us the theme, right? It reflects really the heritage of our leadership and innovation. And for me, it's how we intend for BPI to move forward and to remain not just relevant, but really at the top of minds of the Philippine banking public. It's important that for BPI, even at 170 years, Danny, we must be able and we must be eager to adapt and reinvent ourselves for our clients and our key shareholders. Banking has always been very competitive, and customers will always be on the lookout for the bank that can serve them best, both in product and in service. Nowadays, in addition to our usual competition from our peer banks, there are also fintechs and digital banks that have been steadily gaining ground and opening in this country. The BSP has been opening it up to digital banks. And then especially during this pandemic, when this pandemic has hit hard, and digital transactions have proven to be the key enabler for everyone to be able to do their banking transactions, not only for the large corporations, but for really individuals. In the middle to long term, what I'm really trying to do, and we at BPI are really focusing on four priorities. Number one is really about financial inclusion through that is enabled by digitalization. Number two, we want to really improve and flourish through the excellent customer experience. Number three, focus on responsible and sustainable banking. And then number four, really put more effort and really gain market share in our consumer banking network. Danny?
Sir, great summary there. We'll get to those four areas, or at least what we can cover in terms of
Yeah.
these. Yes. But before we get to that, can you just give an understanding of how the health of the bank is right now compared to pre-COVID times, compared to other crisis periods in the past?
Well, Danny, the pandemic has hit businesses hard in the Philippines, but the banking sector is quite healthy and quite solid. And not only Bank of the Philippines, but I think the general banking sector. For BPI, we reported our second quarter numbers. Our second quarter number this year was 28 or 29% higher in income versus the second quarter last year, really driven by lower provisioning. Obviously, at the start of this pandemic last year, we thought that we would have higher NPLs as an industry. That's not panning out, thanks very much to the support from the Bangko Sentral. For the first 6 months of the year, our income is slightly up versus the first 6 months last year. And again, I think that's very good because this year, basically the first half of this year, we're practically under lockdown, right? So the fact that the banks are able to show lower provisioning because the loans aren't turning as sour as we thought is good for the industry. For loans, I think loans are relatively flat, reflecting, I guess, the general sentiment of the economy where people are not investing, people are in a wait-and-see mode. Our deposits are also going to be flat this year, but that generally reflects the fact that everyone is in a wait-and-see and waiting for this pandemic to end.
Okay, so on the one hand, not as bad as you expected in terms of sour
That's good.
loans, but we've also got the loan growth still lagging there. Let's talk about the key area of centricity here, digitalization, right? So this is something that has been on the table even before pandemic. All the banks were talking about this, but no one was really, really ultra committed as we are right now. We were still even looking at brick and mortar strategy back then. How has this strategy changed now?
Well, no, actually, BPI has been at the forefront of digitalization, Danny. For the last 4 years, we've been investing about 10% of our revenues in our technology platform. And we've really, in the last 4 years, we've ripped out our old platform and put a new platform in. So today, I can see that we have the most solid technology behind. What we've found out since this pandemic started is 92% of our transactions are now digital. And that's in terms of transaction count. But in terms of value, we still have a long way to go. And get people to move the big value transactions on the digital platform. We have over 2.5 million people on our platform. Our app is the number 2 most downloaded app on both the App Store, the Apple App Store, and the Google Play Store. Right? Mm-hmm. What we're seeing is that the transactions in the branch have fallen anywhere from 40 to 70% as people have moved to the platform. So we're really putting a lot of investments in our platform. We have a platform for our retail. We have a platform for our businesses. We have a platform for our small entrepreneurs and micro entrepreneurs. And we're going to roll out 4 more platforms going forward to really cater to all our client base, because I really believe that that's the only way to build financial inclusion. You need to give everyone access to the banking services through a digital means. So that means all our customers will have that.
So you've already announced the rationalization of branches. How would that affect employees? How would that affect upskilling, especially since a lot of your employees are working from home? I can imagine compared
Yeah.
to before. And also, is this something that you are doing due to the pandemic, and you see us, going back to normal banking transactions in the future, or is this something that's here to stay?
No, it's definitely here to stay, Danny. I think I've said it, 40 to 70% of our transactions at the branches. That's the amount that it's fallen by. I think it gives room to reinvent and rethink the role of branches. Now, certainly, we have rationalized some branches. I think the count now is about 20 something to 50 something. There's a plan there, and really, it's taking branches that are close to each other and putting them together. What we call combining branches, so that the people just go to a single branch. Obviously, with the merger of BPI Family Bank and BPI that we hope to close by January, that will give us some room also to take some of the branches that are Family Bank on one hand and BPI on the other hand that are close together, to combine them. What this does is it allows us to rethink the role of branches, and I think that's the more important one. We believe that branches in the future will be more than just places where you transact. We believe that our branches in the future will be places where you can learn, where there will be a better customer experience, because it will be a learning experience. We're beginning to call our branches now stores, where you can go in and browse and figure out what you want to do about your financial investments, about your financial planning. It's a place where you can educate yourselves, and that's the role. And for our employees, it means we have to reskill them. Rather than just being a transactor, we have to educate them about financial wellness. And so we're going through that whole process today. Obviously, you can get the education at the branch. You can also get the education online. But we believe that customers will look for both. And that's why we're converting our branches into what we call stores.
Okay, and on that topic of customer service, sir, you did have this podcast with Robbie Alampay responding to specific customer complaints. I really am curious, with the fact that we are not able to go to branches physically now to lodge our complaints, and we don't have this face-to-face possibility. How are you better able to serve customers if everything is online, if everything is digitized, and our customers, happier, more stressed during this pandemic? Tell us what are the key takeaways of this podcast.
Well, thanks for mentioning that. It was a great conversation with Robbie Alampay. I think what came about from that conversation, right, is something that we've always known, that customers want to be served right away, and they want quick response. Unfortunately, in a time like this, we have many channels by which people can reach us. We obviously have the email channel that continues to provide assistance. So the bulk of our issues come through our email channel. However, many people, it's not an instant response, right? So you send an email and we will respond to that. And our metrics show that we respond to all our emails. The other thing that we have is we've put on chatbots. That's beginning to be something that we're beginning to put on. We're beginning to train the chatbots. But I guess the number one complaint, if you call it that I got from Robbie, is the difficulty of people getting through our call centers and our call lines. And I told Robbie and I told the audience, we beg for some indulgence there. This pandemic has really put a stress. Many people are doing that because they can't come to the branches, but also our agents are also under stress because of the pandemic, we have less staffing at our call centers because we can only do 50% occupancy. So we've moved many of our agents to work from home, but that also has cut the quality because you've got to set VPNs, the internet access from homes isn't as great as from our center. So there are some challenges that we're working on. And obviously, there are people who get sick. There are people who get in quarantine. And so even our staffing count has gone down. We're trying to replace it, but it's difficult during this time. So we beg for indulgence. So if it's not urgent, we ask people just to email us.
Okay, got that. And finally, sir, on the topic of sustainability, you mentioned inclusivity in finance, but this is also something that another unit of yours, GCash, is targeting, and they've done really, really well during this pandemic. Are you trying to go that route as well, targeting those who do not have bank accounts to join your bank, or do you have a different goal there? And finally, I always get the question, okay, we want to invest sustainably. We want our deposits to be going to the right companies. How can we do that in practice? How are we able to literally invest in the economy? How are we able to invest in better firms that are sustainable from an environmental, social, and governance perspective?
Those are great questions. So let me tackle them one by one. I think Gcash, it's a great tool. I think it's really picked up. We look at Gcash as a partner. I've always thought of Gcash as a distribution channel for the bank. We share the same ambitions with Gcash. BPI shares the same ambition of financial inclusivity. On our end, we will use Gcash to reach more people, but even by ourselves, we have BPI Banco, which caters to the SME, the small entrepreneur, micro entrepreneurs. In that bank, we have over 180,000 customers, or really, the mom and mommies, palenque type of entrepreneurs. We've released over 22 billion pesos in loans through Banco just to spur and support that side of the economy. For us also, inclusivity and responsible banking means looking at our expenses, having a greener footprint, being energy efficient, financing the right things. We've made an announcement about whether or not how our coal portfolio will shape up over the next 10 years. And then the last question is whether how people can invest. We do have some mutual funds and unit trust investment funds that are focused on responsible investing, and we're going to be launching an ESG fund pretty soon.
All right, so they do exist, and that ESG fund will be coming in shortly. Thank you so much for that update, CEO of BPI.
Thank you, Danie.
Checking in on other headlines, we're keeping our eyes on Metro Pacific subsidiary Cavitex Infrastructure is eyeing to start work on a 2 billion peso toll road project that will link Cavitex to the CALAX project. CIC President Roberto Bontia said that they are looking to begin construction of the Cavitex-CALAX connector project by late this year or early next year. This as they hope to complete the project by 2023. The 1-kilometer elevated toll road project will connect Cavite to the last interchange of CALAX. Metro Pacific CFO Danie Laurel said they have already talked with BDO for the financing of the new project. Meanwhile, COMELEC says the public works ban for the May national elections will run from March 25th to May 8th, 2022. The ban covers disbursement and spending as well as construction activity in order not to influence the outcome of the upcoming polls. Now, PAGCOR says POGO operators are still disputing the 1.3 billion pesos flagged by government auditors as uncollected revenues from the sector. The gaming regulator said offshore gaming operators claim that other organizations had illicitly hijacked their gambling live feeds. This supposedly led PAGCOR to overestimate the fees that they owed. POGO operators further explained that various websites are allegedly emulating the feeds of legal operators. PAGCOR says these claims are already being validated to verify the actual amounts owed by POGO operators. NEDA Secretary Carl Kendrick Chua says 2.5 million jobs have been created in the Philippines since the start of the pandemic. Chua said this during the ongoing talk to the people addressed by President Duterte. However, the official qualified that these jobs were generated before the entry of more contagious Delta variant. Just yesterday, the PSA reported that unemployment went down to 6.9% in July. That is the lowest since the onset of the pandemic. However, labor participation also slumped to less than 60% compared to 65% in June. National statistician Dennis Mapa said more and more people are getting tired of actively looking for jobs as they feel there's no work available for them. And that's a first look into the business day. Today is Wednesday, September 8, 2021. Catch Businessworld live for the market close. It's at 3:15 p.m. today. I'm Danie Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.